as I did a story yesterday on Peloton's down 91%, Virgin Galactic's down 89%. I mean, it's Vimeo 84%, Beyond Meat, Zoom, Zillow. These are all 80 and 90% down. It's ridiculous. These stocks that are falling off. And this one of them is called Carvana. And I was just telling Mr. Morgan, Carvana, I didn't know anything about it. So I went and looked it up, and there was a YouTube channel just like mine pumping it 4 months ago. And now it's down 90%. So that's why I want to bring you this kind of information. So you'll know how to go through it and what to look at and how to evaluate these gold miner juniors. So I hope the introduction wasn't too long. Don't click off the video because it's going to be awesome. What's up, Mr. Silver Guru?
Oh, well, what's up is gold and silver. They're really not. I say that because they're going down less. I just did a tweet a few days ago, and Chris, it just was gold versus everything else in the broad sense. So gold was in euros up 9%, in the US dollar at that time 0. It was flat, but the S&P was down, this amount. The bond market was down this amount. The real estate market was down a further amount. So everything versus gold was worse off or losing more. Gold was holding steady. And that's really what I would expect at this point in time. I know most of our viewers understand that gold should be rocketing, silver should be going to the moon and all that, but it's going to take time. And that's what we decided to talk about today on where we are in really the junior space. You asked me if I'd come on and talk about how to invest properly in the junior mining sector. And what makes the Morgan Report different than most of the other gold newsletters out there. We're not a gold newsletter. We're a macroeconomic and resource sector newsletter. So I was the first on rare earth elements. I was the first on zinc being in short supply. Talked about cobalt before anyone could spell the word. And I'm not better than anyone. It's just that I want people to know that I'm a lot more than silver, although silver is my passion and it's what I study the most. I have not finished this bit. I'm going to digress to show you my latest book I haven't read.
Oh, wow.
There we go. But this is Manipulation in the title. And this is about the Hunt brothers squeeze.
Okay.
I haven't finished it yet, but I digress. So one thing about, so we put big money into big companies, medium money in medium companies, and speculate with money we can afford to lose. And there's a very interesting technique we're going to talk about in a few minutes that can almost guarantee that you're going to do well in the junior sector when everyone else is losing. And the reason I say losing is because only 1 out of 4,000 projects becomes a mine. Now that number varies, and Rick WROL just did a video on investing in juniors. I have not watched it yet. I can, without watching it, highly recommend it. Rick's been a broker in the business forever. I've known him forever. He knows what he's doing. The difference between Rick and I would be that Rick would probably lean almost exclusively to juniors, which would give the people the idea that, I want to be a billionaire or close to it. I don't have to be a billionaire, but I want to be like Rick WROL. I want to make a lot of money in the mining sector. And all he does is buy juniors, and that's Mr. Morgan character, David, he buys like these big price stocks. There's a difference between me being an investor and Rick being a financer of junior mining companies. Did you hear that? I know Chris heard it. He finances these companies. There's a huge advantage, huge, that Eric Sprott, Rick WROL, some of the other people that you know in the industry that have done quite well, between how they get to enter the junior market and how you, as an average investor, get to enter the market. Once you get to enter the junior space, that stock has already been run up in many cases, not all, but the idea is important, not the exact percentage, 200, 500, 1,000%. So if you're financing that company at a dime and it goes to $1, and then you get to see, oh my goodness, Rick WROL and Eric Sprott both bought this company, it must be great. Well, they're cashing out while you're cashing in at $1. Are they cashing out entirely? No, in most cases not. They might have evaluated it or have one of their analysts look at it and walk the property and all the things that I do with my staff. And the only difference is that they've already made, a lot of money before the public gets in. So that's a little secret that no one talks about. The other part is balancing your portfolio. So my big companies, I've had them a long time, and I teach, my premium members to buy them. Why? Because they're the safest way to make money. If you really want to make money, you got to do things that make money.
That's
And
right.
juniors will make money for you during two periods with blind success. One is when the sector starts, which it did in like the early 2000s. And almost anything that had gold or silver in its name, worthless pieces of dirt. Remember, until you find ore, you're buying dirt. You are buying dirt. You know,
Yeah.
if you buy 100,000 shares of XYZ mining until they make a discovery, you own a lot of dirt. That's what you own. Anyway, I'm not trying to put down the junior industry. Let me just caveat, because, you know, I have a lot of friends that are in that space. Without the junior mining industry, we wouldn't have mining anymore. The big companies will not take the risk of going out and explore, and that's why these companies are important. I'm just saying that you got to get your head around how it really works. And so big money in big companies, and those things I've gone, like Franklin, Nevada is one of my favorite. Write it down. It's $140, I think. We started at 19. You know, not many juniors are doing that after several years, right?
Yeah.
So anyway, I want to go drill on and on, but I do want to talk about the junior space. You have any questions yet, Chris? If not, I'd like you to put in the first slide that we talked about earlier and go through that. Now, this is what happens, and everyone likes to buy these penny stock. Not everyone, but the majority of, as I said earlier, gold newsletter writers talk about, you know, these penny stocks that go to the moon, and some do. But remember, 1 out of 3,000, 1 out of 4,000 is actually it. So what happens here in phase one is, you know, people buy the stock, everybody drills, and they drill and they make a discovery. So that's at point one. And then
Right
at
here.
point two, yeah. So then at
Yep.
point two, they anticipate the discovery high, so it can pop up a little bit, and it gets up to 3. If it's a real discovery, it will go from 1 to 2, that little blip, up to 3. And then from 3, you get.
So what? Wait a minute. What's right here? So
That's
there's
the
these little.
anticipation of the discovery.
So the anticipation's
so
one little
a stock pump, you might consider. It's like,
okay. So this could be where the big boys sell and get their money out. Maybe a little bit. They sell just a little bit.
Well, they are. I can't use the cursor, and you can. If you see this line going 2-1 over here, that's where we're at. They're below that. They're buying way down here. When it comes
we're down
up
here, right?
Probably already got their money back. And when that first little blip happens, probably not too interested, unless they, you know, have a computer model. I mean, it could be. They're waiting for 3, and they'll be selling because they have big positions. They have to sell a little bit at a time. Little to them. You know, they got 10 million shares in the market. Hell, they has 50 million. They can't dump it all at one time. And even with a good discovery, it'll drop the stock. So they'll feed it into the market as it goes higher. They're not that greedy. In other words, they know how markets work. And so, you know, they'll get a profit, another profit, a bigger profit, a bigger profit. Oh, next day it falls off, sell more, a little less profit. They're taking profit. So
this is really good. So if history does us any justice, we could be right here, maybe here. You know, we don't know how far this could go down.
Well, in the whole sector, we're right there, Chris.
Yeah,
and then we'll get, let's say, by the end of the year, we'll get up to number 2. I'm anticipating a real good fourth quarter in the metals. I think both the metals will do well. I think the miners will lead. And so even these stocks that are moose pasture will probably do well because stocks move on buying and selling pressure. So
all ships rise with the tide. That's the best way for me to think about it.
Yep.
And this time might be a speculative bubble like crypto. You know, it could. So this line might be up here, and then it might go way back down here again. You know, it's hard to say.
Yeah, no, that's a good thing to point out. And I agree. Of course, I'm biased. I put my whole life into honest money, sound money, and the miners. But when everything else goes, there's not a lot of room for this sector. And most people have an E-Trade, Stock Trade, Ameritrade, an electronic trading platform. And it's a lot easier to look up a mining share on the internet and click the mouse than it is to find a local coin dealer or, you know, put your money out over the web. Some people don't trust that. Of course, most of these dealers are totally on the up and up. And you have no issues at all. Nonetheless, and to be fair, I mean, I've always advocated having real metal first, but I've made far more money in the mining sector than I have in the metal itself because you get this leverage. So,
well, that's one of the other reasons. A lot of people I only want physical. If you don't hold it, you don't own it, and that's true. And if that's you, then do that. If you want to be that safe. I mean, right now you're doing good. I had a guy roll his IRA over 3 weeks ago. He's already saved $12,000. He figured it up. I mean, that is the really, really safe way, because if he'd have bought gold miner shares with it, it wouldn't be looking like that.
Right.
But some people want to leverage, like me. I want to leverage a portion of my wealth.
A portion.
Sure. So this is a really good chart. So take a screenshot of this, guys, because it's kind of blurry. I'm not sure why.
It's the best I could find, but
no, that's cool.
One more. So then we go to 3, you get that anticipation. And now you actually get confirmation in disinterest, and it slides down. Now, this is going to be a mine. This is from discovery to production. I want to absolutely emphasize this. You're looking at a picture of that 1 in 4,000 right now, people. Okay. And this is idealized. It's not perfect, but the ideas are absolutely correct. So now what you would have done is you would have been far better selling on the way up to 3 than to wait 3 or 4, 5 years to get to 4 and 5. While it's, even though made the discovery, interest jumps off. In other words, the market anticipated to be worth so much. Well, now, so you get all the way over to 4 and 5, years go by. And then we get back up to 7, and you're basically even in money wise, stock where you were when the discovery was made, but you had to wait 5, 6, 7, 8 years to get there.
So I've heard of a 10-year bull market. I mean, what is your thoughts on that?
Say that again, Chris. 10-year,
a 10-year,
ahead of us in gold.
Right. We're in the first leg of a 10-year bull market. Have you heard that?
I disagree, but I don't know. I mean, I don't.
Well, you're saying this could be 5 years.
So that's for a mine. That's not for the market. That's not for.
Okay, I got you. Okay.
But to answer your question on the length of this market, usually we've had 2 legs up and 2 legs down. And now we're going to start the 3rd leg up sometime, probably by the end of this year. The last leg of the bull market is usually the shortest in duration, but the greatest in gains. And that's why I've been known to say many times that 90% of the move comes in the last 10% of the time. If you were very patient and you bought silver at 1965 when it was demonetized in 1873, but really we used it in our coinage up through 1964. So if you bought silver at the monetary price of $1.29 an ounce in 1965 and you held it to 1979, the price was at $6 fiat for silver per ounce. And that was an all-time high. But if you're a rank speculator, you know nothing about markets, you weren't afraid to buy high to go higher, and you bought in January 1979 at 6, 1 year later, it was up 850% at 50. So that's this rapid rise. And that's how markets work. Now, will we have 90% in the last 10% of the time? I don't know. I anticipate we'll have something close to that, which means we've probably got about 2 or 3 years left till we get this blowout high.
Well, okay. So you can take food prices and kind of calculate into this too, right? So if we're, trading in guns and butter, these might not be doing so good, right?
Right.
But as we approach the death of our fiat currency, they've all died. Every one of them do the same thing. As we get into this and people start using this stuff, there's people buying this every day, every single day, first-time buyers. They want a little bit and then they buy more. And silver's below. That's the actual silver price. It's below $20.
Yeah,
it's to you. I can get it to you for $22.95. That's pretty interesting to me. It seems like a buying opportunity. Kind of buy it on the way down. Most people don't like to do that. They like to buy it when it's going up and like to FOMO in. But I'm having a lot of smart people take action. So, man, this is really good. Take us from 7 to up here.
Well, that's kind of boring, but that's where you actually get the mine operating, and then the mine's producing a profit, and the stocks usually, not in the modern era, develop their price based on earnings. When you're an equity holder, you have the opportunity to get paid what the company makes, but it's the financiers and the bondholders that actually have a rights to the company. So if you buy XYZ Corporation and it's a brick mortar building and they make widgets, if the company fails and you finance the company with bonds, you get to go in and you have parts of the building, parts of the widgets and everything else. But if you're a stockholder, you get nothing. When the company's out of business, there are no earnings. So your stock is basically zero. So there's a big difference between a bondholder and a stockholder. A lot of people don't know that. They think they've got equity because they call it equities, like they own part of the business. No, you own part of the earnings. That's what you own. And if the company retains earnings, which most companies these days retain earnings, they don't pay dividends anymore. Yes, some stocks do. I know that.
Sure. Well,
so you're in there. So going 7 up is you got.
I want to push this point across really one more time, guys. We could be right here, and this could go down here. Yep. You could be buying an 81-cent stock and it go down to 10 cents.
Right.
We just don't know. So, just the narrative's there.
So that's one time. So you could buy almost anything and make money, big money. That's one place. The other place is at the end of the cycle, which we're coming into. And that's when gold finally takes off and silver takes off as well. And we start seeing these, up days and weeks and months. Then a lot of these junior stocks will take off, even though a lot of them don't have merit. They're still dirt. They're still what we used to refer to as moose pasture. Over by me in the Silver Valley, we've got a very rich ore bodies all over that Silver Valley. But there's still moose pasture over there as well. So you got to be careful. But if you want to have blind success, you got to time it when the cycle is really, really hot. We're not there yet. So in the meantime, we'll go through it. So I'm going to digress. This is something I want everyone to look at. Came in Forbes magazine. It's the inflation adjusted price of silver. Came out in 1998, right after Buffett announced that he was buying all that silver, roughly 130 million ounces off the COMEX. So if you go back, it starts at 1344, and you can see in constant dollars, or 1998 dollars, I should say. So 24 year ago dollars, constant. So it was at $400 in 1344. You can see it hit an all-time high in 1477 of 6 or $56 up there. And then it dropped down, and from like 1604 to, we'll call it 1764, right around $200. And then we dropped it down, and that 1764 down to, I'm going to call it 1800, where it roughly was right $70, let's say 70, 80. And then, of course, it dropped down. Now, remember in 1873, we had the crime of 73, which demonetized silver. And that's where you see this big drop off. And then we got the spike high in 1980 with the Hunt brothers. And then it dropped down. The point of this chart, when they wrote the article.
So this was the Hunt brothers right here?
Yep. Exactly. There you go. Right there. And then all the way down. And that's when Buffett bought. Buffett bought at an all-time inflation-adjusted low. Remember, we're looking at constant dollars. So we're looking at what was $413.44 in 1998 and was $4.73. That's when Buffett bought. So obviously the billionaire class is buying at the right time. I couldn't get hardly anybody on my website to get interested in silver, even though it was at that level. It was like, everyone buy low. Well, we're low, people. I had a guy from Europe call me and asked me about this fund. I had a fund, not me personally. There was a fund available in the public domain that was selling at that low at a discount. And I was using that to advertise my abilities, my knowledge, my website, trying to make a living on the web. And of course, I was called scammer and all that without any investigation at all, right?
Oh, yeah. I know exactly what you're talking about.
Yeah. So this European guy, he thought, well, maybe I had some merit, and called me, and he loaded up on it because that actually is like a 10% discount. So I think we've beaten that horse. I'd like to go back to the junior mining chart, if you have it, and discuss that with you. Yeah. So this is the same one. I don't like this one as well, but it shows you that this is a failure mode. So the first one we looked at was it went into production. This one's kind of misleading because it says project fail. So what happens here on this one, same thing, I'll go fast. Penny stock, get a couple good drill holes, and the stock goes way up above, just like the other chart. The same thing happens. They should match. And then you see this red line that comes down. That's when the project fails. So then it comes right back down to the same price or lower, or it goes to zero, which usually happens. So that's the project fails line. Then it's like the other one. The other one's more in duration. So I want to do a quick story. I had a stock here that was actually in the Silver Valley or close to it near the Troy mine. And they had one of the biggest copper silver projects around. And I put it as a recommendation to Morgan Report, and I wrote it up. No one bought it, or very few. And so I thought, well, what have I done wrong? So I looked at it, the report I wrote, and I said, oh, I think maybe I need to show it in graphic form. So what I did is I said, if you're buying a share, it was called Mines Management. It's off the board. It's been bought by Hecla. So the next month showed, if you put $1 into stock A, B, C, D, E, F being Mines Management, you're buying this much silver per dollar in the ground. So most of you are buying, 5 ounces, 7 ounces, 8 ounces, and you're buying like 30. I forget the number. I'll give them the right idea. 30 ounces per dollar in the ground. And plus it was Kennecott owned it, and they moved it over to Mines Management. I put that out, and the stock took off. It went from the Eastern markets over in Asia all the way through, and it was like the biggest volume day it ever had. And it kind of did what this chart shows. So we got in at I think it was about $1. It went up to 10. I told all my people to stop in at 8 to protect their profit. And we sold out, and we watched it do what this curve shows. And it wasn't really a discovery, but it was a discovery by mining investors. So, but the project would become a mine. And so it dropped off. Well, the other chart shows it better, but don't change them, Chris. But remember, we get this down, and we got to get this U, and then it comes back up to where the project is actually producing. Then it goes up because they're making money. So being as smart as I am, I said, okay, well, it's been like 6 years and they're ready to go. I will buy it now. Stock was back down, I think lower than it was on the way up, where it goes from that price at makes that U and then goes up. And
you're talking about right here?
Right there where that arrow shows market perform. I was buying it in that range somewhere after years, and I was wrong. I just had to wait and wait and wait and wait. And, it just was not a smart thing to come back to that stock, even though I know how the system works. And we did get, as I said, bought out by Hecla and made a little bit of money, but nothing close to what we made on the discovery phase.
So it might be a good idea when these miners do run, because the narrative's there, and that's what it looks like they're going to do. When they run up, you could start selling.
Yep.
Along the way.
Sure.
And maybe hold 25% of your original purchase.
Well, yeah. What we teach is what most do. I think Jim Dines was the first to do it. I'm not sure. We call it a free trade. So the best thing to do on any of these juniors is to buy it at 12 cents. When it gets to 24, sell half and ride the rest for free. Now you got your money back. And if it takes off, you own, well, I could have owned us double the amount. Well, don't be so greedy. Love what you get, because it's all you're going to get. And if you get your money back and you can bet on another horse, you just increased your chances by double, right? So there's a real smart way to play it. That's almost everybody in my industry teaches. And it's a great way to go. And the other way, of course, is you can buy mutual funds. There's mutual funds that kind of have like a Morgan Report philosophy, which means, I got some big tier, mid tier, and some speculations, but, you can't make a lot on those, but you'll do well in the sector and sleep well at night because you got professional management. Whereas somebody that subscribes to like my service, it's a higher risk, higher reward situation. I don't get them all right, but I get a lot of them right. So, but that's, again, money you can afford to lose. Last thing I wanted to say is that on this chart, what very few teach, and I do, is that until they get a discovery, you have dirt, right? Once you have a discovery and it starts up that slope, if you catch it early enough, and I have several times, then you do a quick back of the envelope calculation. And you say, okay, this is the discovery. And there's, some crystal ball is involved here. But, they're on their 100th hole. They've got this, they've got three discovery holes with them. So you can anticipate they've got this much ore at this grade. And then you can do a back of the envelope, calculate what that company's worth. So if it's going up that curve and it goes from $1 to $2, but it's really a $20 stock, you're a lot better off buying it at $2.50 and riding it up, high, and keep a stop right behind it, 15% trailing stop, and take out that lion's share of the market in a quick amount of time. But would anticipate what I'm showing you. I'm giving you a gift in a way. I gave this lecture one time in Arizona, and this lady came up to me and she goes, God, I've been in this sector for so long. No one's ever told us this. I'm so happy. Anyway, it's not magic. It's out there. You can find this curve anywhere. So that's what I do on some of these. It's like, okay, the market has changed. How much is this company really worth? And sometimes its price is already over what it's truly worth. Stay away from it.
Well, I mean, what's it worth? It depends on what they're mining, right? If what they're mining,
well, it depends what they're mining, what the price is, how big the discovery is. The whole key is to anticipate after the discovery is made, how big is that discovery? And that's like Aurelian, for example, one of the biggest mines in Ecuador. My friend Dr. Barron, Keith and I are pretty close. And I don't remember the exact numbers, but one of the guys in Canada that run a hedge fund, that stock ran, I'm going to make up numbers, I don't remember them, but ran up from 75 cents to 275. A lot of people got out. That's a pretty good gain. It went from like 275 to 40. He didn't get in till it was like $3, but he knew the cycle and knew what it was worth. More importantly, he knew this, but what he really knew was that discovery was so big that if you did it on a per share basis, the stock was worth $40 a share. And they usually go overboard, right? Stocks go undervalued, fair valued, and overvalued. And on a discovery, you can anticipate, as the chart shows, they're going to get overvalued. And then when the euphoria wears off and the reality hits, then it comes back down, just like this chart showed.
Right. And this could be way down here. You could have an opportunity to sell half somewhere in here, ride it up. Maybe not. Nobody gets smart enough to get the top, and you might have an opportunity to buy back again.
Yeah, that's what I told you I did, and it worked, but it was a lot longer wait than I thought it would.
Yeah, that's the timing thing is evading. That's for sure.
And there will be a time when these juniors run like crazy, regardless of merit. I have the URL, Chris. It's called silverspeculator.com. I'm not committing to this, people, but I'm thinking that when we get into that phase where we get that 90% of the move in the last 10% of the time, if that happens, and we'll know, I might activate that URL and just have, probably be a pretty cheap service. What I would do is probably write a program that would say, show me all the juniors in the space and give me the top 10 movers of the day. And you can do this yourself. You wouldn't have to pay me. It's something I've just thought about because I know how markets work. I know how this sector works. Put my whole life into the sound money and the miners. So it might be something I do or might not do. But there's ways to do it, but you got to do it smart. You don't want to put a lot of money in any particular, and I call them story stocks, Chris. There's a story that goes with every one of those stocks. And the stories are usually just really wonderful. But people like good romance. They fall in love with the story. But, after a few years, they discover they actually have a human being. No matter how romantic it starts, somewhere along the line, you discover no matter how good she is or he is, or it's all about they're still human. Same thing in the mining business. No matter how great the discovery was, all it is a very important asset that's going to be mined out. Remember, all mines end in failure. And this is the only business that I know of that you're guaranteed to fail at the end. Because once that last ton of ore is taken out of the ground, you got a big pit or an underground situation, and it's done. There's nothing left. So there's a lot to investing in the miners that a lot of people really don't think about. Maybe obviously there's ways to keep learning, and I'm still learning, but it's a fascinating business. And
if anybody
prior to the cryptos, it was probably the best way to make a big score.
You gave me this book, and I have been getting into it, not as much as I want to, because it's just nuts how much time I don't have to read anymore. There is so much information about silver in here. If you want to know all the ins and outs, Mr. Morgan told me he's got about 9 cents an hour in this book. That's what he got paid to write this book. And I know his time is worth way more than that. So you might think about the Silver Manifesto. It is the ins and outs, the end all be all of silver books. I keep it right up there so everybody can see it, because everything's in it. So I hope you'll check it out and check out the Morgan Report. I know people ask me all the time, how do I find miners? What do I do? And I talk about them on my channel all the time, but I'm being paid to talk about these companies. I'm never going to, try to push something that I get asked to talk about all kinds of stuff, and I don't do it. When I see a good mining company that could be good, you don't know if it's good or not. I'll bring it up, and it's up to you to do your research. And it's going to be the same thing with the Morgan Report, but that's another good avenue to find,
well, we do the research, and we do suggest, certain miners, obviously top tier and the mid tier, pretty safe. On the junior side, our record's probably better than most, but far from perfect. We've had several of these go to zero because they don't discover anything. And we've had some that have done really well. In fact, I have more mining companies that actually became mines than anybody else in the business. And I'm not a geologist. How the heck did that happen?
I don't know. You did pretty good.
It's really common sense, but we're past that phase. That was the beginning phase I talked about, where almost anything went up. And now we are going to be in that phase again where the speculative bubble takes off. It'd be like going from number 7 to 8. You're going to get that big run real quick. And that's when you want to be on board. The one thing people don't know, especially the commodities, and this makes no sense at all, but it's true, is you can buy high, anticipating it's going higher. There was another article in Forbes. I'll close out with this, Chris, but this is, I don't know, 35 years ago, but this guy was a professional commodities futures trader, and he made big money and lost it back, and he never really got a handle on consistency. So he took a year off and studied the markets for a whole year. And he came up with his own technique, and he's going to take out the middle. So when silver took off, he didn't get in until silver was somewhere around 12. Remember, it was at 6 at January 79. So somewhere in, I don't know, March, I'd have to look at a chart, March, April, it hit 12, it would be a matter of days. So it starts going up. Anyway, got in at 15, got out 35. So he took the middle out of it. It took a matter of like a week or two, and he was done. And he told his wife, we're out. And of course, she knows what her husband does. He trades futures, and he's in, and he's out, he's in, he's out, he's in, he's out. She goes, okay, good. Like the trade is over. He goes, no, we're out. We're done. We are done. We are retired. We've got our dream ahead of us. Financial freedom means something in the old days. These days, it's your social credit score. It doesn't matter what your net worth is. But in those days, if you made a killing like that, you get a lot of freedom. And he did. We're done. I made that silver trade with bet the farm, took the middle, didn't try to anticipate the bottom, didn't try to anticipate the top. Just knew how markets run. He got into that phase that we showed on the chart. He knew we were in that phase. He knew it wouldn't last very long, and he knew he couldn't get too greedy. And he sold into strength, and that was the end of the game.
That's a dream that might come true. I just don't know how. I can't see it any other way as the currency's down and people, because I know it happens when the prices that are being held down with paper, those prices on the board are being manipulated. When they can't do that anymore, and it's absolutely obvious what real money is, because most everybody's been talked out of it. When that starts to happen, because we can't just get that stuff. It's not just, you have to mine it, and it's harder to get to. And, we're going to have to start pumping these mines up. These mines are going to have to start going for, go drilling the holes and doing their thing. And when they do that, I think if it's not the next speculative bubble, I don't know what is.
Yeah, I really believe that as well. I think it's going to be a run to gold like we've never seen. I mean, if you look at monetary history, there's been several runs to gold because everything else is failing. I mean, the short course and very, quickly is fiat fail, gold. Fiat then go off gold, go to fiat fails, back to gold.
Right.
There's much more to the story than that, but in a very...
Brother, I have kept you long enough. Thank you so much. That was a great video. I hope people made it to the end. If you did, put hashtag Ninja Nation, hashtag the Silver Guru, because I really appreciate you coming on. I will do it again anytime you want. Don't forget the book and the Morgan report. I'll put it in the description and I'll pin it in the comments. Have a great day, Mr. David.
Thank you.